In this tutorial, we're going to show you how to prepare a statement of cash flows. You should note that the example we're going to look at is probably more difficult than what you would see in the real assessment. While AAT have provided a sample assessment to show you how this may be tested, we don't know exactly how the assessment will be structured, and we want to avoid that you are put off by some element of a question that you haven't seen before, and therefore if we can show you some of these issues in this tutorial, then it may help you to be less surprised if it appears in the real assessment. So in the assessment you'd be presented with a balance sheet for 2 years, and normally you'd be shown a profit or loss account as well. Now in this particular example we just have the balance sheet for this year and last year. We don't have a profit or loss account, but we do have some notes at the bottom which will support us with that. And we've got 6 notes at the bottom, and in the real assessment you probably wouldn't have quite as many of these, but as we said just now, we want to expose you to a few more issues so that you're prepared for any unexpected notes that you may see in the real exam. So it's quite likely that you might see something very similar to note 1 and probably also note 5, but the other ones you may or may not see those in the real assessment. And then if we scroll down a little bit further, we'll see that we have a pro forma answer here. Now in the real assessment, some of the text here may be drop-down menus. You may need to choose what words you're going to show in your answer, whereas in this example everything is completed for us. So here's the standard format. So we can see that we have a section for our operating activities at the top, and then we have a section for investing activities, and then a section for financing activities, and then at the bottom of the statement of cash flows we have a reconciliation between the opening and closing cash and cash equivalents. Now you should be aware that in the real assessment this will normally be shown as 2 answers. So you'll normally need to work out the cash flows from operating activities as one task, and then the rest of the cash flow statement as a separate task. Now this can be quite frustrating jumping between tasks in the exam, so our recommendation would be to prepare the cash flow statement on your scrap paper, and then when you've completed everything, enter the numbers into the 2 tasks on the computer-based exam software. So let's have a look at the information. So we're presented with the 2 balance sheets and with our cash flow statement, and our technique should be to work through the balance sheets line by line and to make sure that we've included all of the numbers from the question. Some people are tempted to start their answer by working through the cash flow statement line by line. So they might want to try and first of all work out what is the profit before tax, and then find out what is depreciation, and then what is amortization. So they work through the answer line by line. But the risk of this is that you're going to spend a lot of time scrolling through the question to try and find the information that you need, and that could be a big waste of time. The other risk as well is that if you don't go through the question line by line, then you may miss some numbers that you need. So it's going to be much more effective that we don't think about the order of the cash flow statement. We don't work through this in order. What we're going to do is work through the question in order and put the numbers into the appropriate place in our answer as we go along. So you saw a similar technique when we were looking at preparing the profit or loss and statement of financial position in the course earlier. So we're going to be nice and methodical, and you can see that we've got our balance sheet, so each of the numbers here should appear in our answer or in our workings once. And if you remember the idea of a cash flow statement, if we just look at our first line here with our property, plant and equipment, we can see that property and plant and equipment for last year was 930,000, and that's increased to 1,300,000. So how could this have increased? Well, it's likely that we bought more property, plant and equipment in that time, and we spent some cash on that. So what we need to work out is what is the difference between these two numbers and how much of it relates to cash and how much of it relates to other things. So there could be some other adjustments like depreciation, for example. So with property, plant and equipment, what we want to find out here is what is the movement between these two numbers, and typically the movement will be additions, and there'll be a movement related to depreciation. Now there may be some other movements as well. There may be some revaluations, there may be some disposals, but normally what we need to work out is either additions or depreciation. So typically what will happen in the exam, the notes will tell you what additions are, and therefore you've got to work out depreciation, or the notes will tell you what depreciation is, and therefore you've got to work out additions. So we're normally looking for one of these two unknown numbers, which will help to explain the movement between 930 and 1300. So we need to use these two numbers in our answer. Let's scroll down. So we're either going to work out what is depreciation, or we're going to work out what is the purchase of property, plant and equipment. Okay, one of these two numbers. So typically in the exam, depreciation will be given to you. So I'm going to assume that in this case, we're going to work out what is the level of additions, the purchase of property, plant and equipment. Now you can work out this number in two ways. Remember, a working will normally be provided in the computer-based exam software for you to do this. But I'm going to take a bit of a shortcut now. So what we know then, at the beginning of the year, we start off with 930. And there's going to be a variety of adjustments, aren't there? So there's going to be some additions, there's going to be some depreciation, there may be a disposal, so there may be some other adjustments, and then at the end of the year we know we're going to complete with 1300. Okay, so that's what my working is going to look like, although in the real assessment you would have a table to complete, but just for simplicity I'm just showing it here as a simple horizontal line of workings. You may, if you're happy with T accounts, you may prefer to use T accounts. So I'm just going to show you how to do that as well. So we're going to have a T account for our property, plant and equipment. So we know we've got a brought forward balance of 930 and we'll have a carried forward balance of 1300. And again, what we're going to find out is they're going to have some additions and disposals and so on, so we can complete the T account. So I'm going to show it you in this method of working, and you should choose whichever you feel most comfortable with. Right, so let's go back and have a look at our question. So we've used these two numbers in our answer. Now in the real exam it'd be nice if you could sort of tick these off on the screen as you went along, but I'm just illustrating here the technique of how you should methodically go through the question line by line. So next in our balance sheet we have our investments at cost. So we can see that our investments have gone down in this case by 50. So it looks like there's been some sort of disposal of those investments. Now what we need to think about though, what are these investments? So potentially they may be cash and cash equivalents. So they'd be a cash and cash equivalent if they were sort of short-term, highly liquid investments. But on the basis that these are non-current assets, then it's likely that these investments are not part of cash and cash equivalents. So they're going to be some sort of long-term investment and will appear in the investing activities part of our answer. So if we scroll down, again, we can look at our investing activities, and we can see that we've got some proceeds from the sale of the investments. So we know that, that we've sold 50 of these. Yeah, there's 300 minus 250, and that gives us 50. But that's the value of the investments that are sold. That's not the proceeds. So we may need to make a further adjustment to find out how much we actually sold them for. Okay, let's go back up. So I've used both of those numbers in my workings. Okay, so let's move on. We've got our inventory. So we know that we just need to take the difference between these. We've got a difference of 30, haven't we? And this is going to be part of our working capital adjustments. So we need to go to our operating activities, and we can see there's the section for our working capital adjustments. So we have our inventories, so it was 310 minus 280, so we've got a movement of 30. So if our inventories have gone up, that means that our cash must have gone down. So if we move on now to our receivables, we can see our receivables have gone up by 90. Yeah, there's a movement of 90, and this is going to be the same. This is part of our working capital. So, oh sorry, it's gone up by 70, hasn't it? Yes, so it's gone up by 70. So let's put that adjustment in our working capital section, again in our operating activities. So we have 380 minus 310, so that has a movement of 70. So receivables have gone up, so again that means that cash must have gone down. So remember, for the assets, yes, the cash movement just goes in the opposite direction of inventories and receivables. So let's look at the next line now. So we've got some cash, so there's 30 and 20, so we can just put those in our cash and cash equivalents count. We've got 30 and 20. So it goes right at the very bottom of our answer. So we've got cash and cash equivalents at the end of the year of 30 and at the beginning of the year of 20. So again, I'm just doing a working for this because there may be some further adjustments, there may be some short-term liquid investments, and there may be an overdraft that we need to use to adjust this as well. Okay, so let's go up. Now we've covered all of our assets, so let's progress with the rest of our statement of financial position. So the next two, we're looking at equity now. We've got our capital and reserves, and we have our ordinary share capital and our share premium. And we can normally take a bit of a shortcut here and consider both of these at the same time. So we can see that ordinary share capital has gone up by 80 and our share premium has gone up by 100. So it's likely that we have 180 of cash raised by the sale of shares. Now there may be an adjustment here because possibly there was a bonus issue during the year, and the bonus issue is when we give away shares for free. So possibly it may not be 180, it may be less than that if there was a bonus issue. But we don't know that yet, but at the moment we've got 180. So I can put that in my answer. Okay, we may need to make an adjustment to that a little bit later. So we've got the sale of our shares. So we have the 280 and 200, and then those are the balances at the end of this year, and then we take away the balances last year. So at the moment we've got cash coming in of 180, but we may need to adjust that if we've got some further information. So if we scroll back up, next we have a revaluation reserve. So there's an increase of 100 here, isn't there? Now that's a revaluation, there's no cash changing hands here, is there? And so that's going to be an adjustment to our property, plant and equipment. It helps to explain, doesn't it? How did the 930 get up to 1,300? Well, part of it relates to a revaluation of 100. So let's put that in our working for property, plant and equipment. So we start off with 930 and we've got our revaluation of a further 100. Okay, so that's going to be on the debit side of our T account, or I can just put a plus 100 in my other format of working. Okay, so let's move up now. Again, have a look at the next line. So we've got our retained earnings. So we can see there's an increase of 90 here. Now, ordinarily, we'd be provided with a statement of profit or loss in the question, and we could just compare the 90 increase here with the number at the bottom of the profit and loss and see that they were the same. But they may not be the same though. They may not be the same because there may be some dividends, for example, which might explain the difference between the change in retained earnings and the profit for the year. Now in this case we don't have a profit loss account, so what we'll need to do is derive the profit from this movement of 90. So we know that at the very beginning of our profit loss account we need our profit before taxation. So we know that we've got our opening retained earnings of 300. We're going to add on to that the profit for the year, and then we're going to deduct from that perhaps any dividend, and that's going to give us our closing balance of 390. So you see that's very similar to the sort of working we did for our property, plant and equipment, which you can see at the bottom of the screen now. So what we need to work out, what is the profit before tax? So yeah, we've got a missing number. What is this profit before tax figure? So we don't know that yet, so we'll have to come to that a little bit later. Okay, so we've used all of these numbers now somewhere in our workings. So now we have some non-current liabilities. We've got some 10% loan notes. So we can see there is an increase of 50 in these loan notes. So we've raised some more cash, haven't we, by borrowing some more and issuing these loan notes. So that's part of our financing activities. So we scroll down to our financing activities, then we see the issue of our loan notes. So we have 350 minus 300, and that gives us 50 of cash coming in as a result of those loan notes. Okay, so that's the loan notes. So we've used those two numbers. Now I noticed that there's a number here as well. Okay, so we can see these are 10% loan notes. And these loan notes will be incurring interest, so we need to think about that as well. So we just be careful that there is a number here that we may need to use. Right, let's look at our trade payables. So we can see there's an increase of 10 here, and that's part of our working capital adjustments as well. So let's tick those numbers. Let's put that into our working capital adjustments. So here have our payables. So we've got 280 minus 270, so that is an increase in payables of 10. But in this case, if there's an increase in payables, that means that there must be an increase in cash as well. So for the two assets, yeah, the increase in the asset means a decrease in the cash, whereas for the liability, if there's an increase in the liability, then there's an increase in the cash as well. Okay, next we have an overdraft. So an overdraft is where we are borrowing from the bank, but when we are borrowing, you may think this is part of financing activities, but no, this is considered to be cash and cash equivalents. So we need to add or deduct these numbers. Yes, an overdraft, this is negative money, isn't it? So we need to deduct these numbers from our cash and cash equivalents at the bottom of our answer. So we need to deduct 330 from the 30 at the end of the year. So that means we've got negative cash and cash equivalents of 300 at the end of the year. And we need to deduct 340 from the 20. So that gives us at the end of last year cash and cash equivalents of negative 320. So that tells us, therefore, again, if we just work backwards, that there's a total of 20 increase in cash and cash equivalents at the end, or during the year. So that's our cash and cash equivalents. So let's have a look at the rest of our statement of financial position. So we just have one more number to deal with. We've got dividend payable. Now, just note that we've got this working for our dividend payable. Now, in the real assessment, you might do an equivalent working for tax payable, or there may be an equivalent working for interest payable as well. So the style of working is the same, whether it's dividend, tax, or interest. So we've got our dividend payable, so we can see that there's an increase of 10 here. So we've got an opening balance of 30 and a closing balance of 40. Let's put that in our workings. So there's a space for dividend paid in our financing activities. So we know that we've got a payable at the beginning of the year of 30. That's going to increase with the dividends declared for the year. It's going to decrease with the cash that we paid, and then at the end of the year we've got a payable of 40. Again, if you prefer to do it as a T account, again, so let's do it as a T account as well. So this is our dividend payable. So we've got a brought forward balance of 30 and we've got a carried forward balance of 40. Okay, so if you prefer to do a T account, then we can show you both methods here. Okay, so we've gone through all of our statement of financial position now, and you can see that every single number has been used in some way in our answer. Now, if we look at our answer, we can see that there are some numbers included already. We've done all of our working capital adjustments, haven't we? We've got our figure for shares and loan notes, and we've got our cash and cash equivalents. So we've already managed to earn quite a few marks just by going through the balance sheet line by line and putting those numbers somewhere in our answer. But notice that there are still quite a few numbers that are just part of our workings and haven't yet come to a conclusion on those numbers yet. So there's still quite a lot of white space here in our answer, isn't there? Okay, so what we need to do now is go through the notes and make some adjustments here. So now we need to go through the additional notes, and as we mentioned earlier, it's quite likely that in the real assessment you'd have fewer than what we've presented here. But again, I think it's important you're exposed to other possibilities so you're not too surprised by them if they do come up in the real exam. So the first one, which is pretty typical, and there's an example of this in the sample assessment. So we're told that during the year, property, plant and equipment with a carrying value of 80,000 was sold for 60,000. Now, one thing we need to be aware in terms of our exam technique is that any numbers that appear in the notes will typically appear twice in our answer somewhere. So notice that in the statement of financial position, each of those numbers has one tick next to it, but with these numbers in the additional notes, we'll need to put 2 ticks. Okay, and this is sort of part of how you're going to control your progress in the exam, because you need to make sure that you are using all of the numbers and you are using them as many times as you need to. Otherwise, potentially, there may be a gap missing somewhere in your answer. So if we have a carrying value of assets of 80,000 have been sold, that's going to help explain how property, plant and equipment has moved during the year. So we need to show this as a deduction in our working. So we can see that we had 930 at the beginning of the year. This was revalued up, but we've just sold 80 of it. So we need to take away 80. Okay. So we can see we've used that number once in our answer. So we can give that 1 tick, but we need to use it somewhere else as well. We're also told we sold it for 60,000. So that's cash, the proceeds from the sale of this asset. So that can go straight into our investing activity section. So we have the proceeds from the sale of property, plant and equipment, and we sold it for 60. So we've used that number once, but both of these numbers, the 60 and the 80, need to be used somewhere else as well. So if we had the assets that were worth 80 and we sold them for 60, so we can see that we've made a loss on the sale of those assets. Now we've made a loss of 20, haven't we? Okay, so that can appear as part of our reconciliation from our profit to our cash generated from operations. So you can see we have a line, the loss on the sale of property, plant and equipment. So we had assets worth 80, we sold them for 60, so we've made a loss of 20. So that should be shown as a positive number in our reconciliation, because remember that in the profit or loss account, a loss would be shown as a negative number. But what we're trying to do now is we're starting with our profit before tax figure and we're trying to work backwards to try and work out how much cash was coming in. So if we're going backwards, that negative number loss would now be a positive number cash adjustment. So we've used the 80 and 60 a second time now, so we can give another 2 ticks for this, and that's good. And we're also told that the depreciation charge for the year was 100,000. So like a loss on a sale, that 100,000 is not a cash figure in the statement of profit or loss. So we would deduct 100 as an expense in the statement of profit or loss, but it's not cash. So what we need to do is add back 100 here in our statement of cash flow. So there's one use. We can put one tick against that number. We need to use it somewhere else, don't we? Well, it's also a reason how our property, plant, equipment has changed. So we started the year with 930. We increased that by 100 because of revaluation. We decreased it by 80 because we made a sale, and now we further decreased it by 100 because of depreciation. So there should be one more number, so we're looking for the additions, aren't we? And that's likely to be whatever this missing number is here. Now if you're following along with the T account, so we'd have our depreciation and our disposal, so we forgot those, didn't we? We've got our disposal of 80, and we've got our depreciation of 100. And what we want are the additions, that's the missing number here. So when we balance off our account, yeah, we will find out what that missing number is. Okay, so let's go back. So we've got 2 ticks. We've used that 100,000 twice in our answer. Next we have investments which cost 50,000 were sold at a loss of 10,000. Okay, so we've got that loss, so that's another non-cash adjustment, isn't it? So we can put that in our reconciliation, the first part of our answer. So you've got the loss of 10,000. So we just put that loss. So remember, the loss would be negative in the profit loss account, so it's positive here when we go in reverse. So we've used that once, and then the other place to put it is going to be in our investing activities. Yeah, so we know, don't we, that there is an adjustment of 50. Well, we've calculated that already, haven't we? We've got the 300 minus 250 for those investments, so that's that 50. And we know that we made a loss of 10, which means that we must have sold them for 40. Yes, so the 300 minus 250 is 50, and then take off the 10 loss, so we must have had proceeds of 40. Okay, so we've used that number twice now, so one of them to work out the proceeds, and one of them just explaining the movement between 250 and 300. Next we have 80,000 shares which we sold for 225. So 80 multiplied by 225 gives us 180,000. So that explains, doesn't it, the 180,000 we saw earlier. Yes. I was wondering at the time whether there was any bonus issue of shares which would explain a movement but without any cash. But in this case it seems to be that it's entirely cash based. So we put 180 already in our answer, didn't we? So that's there already. We don't need to make any adjustment for that. Okay, so we can move on now. So next, a further 50,000 of 10% loan notes were issued, where we already put that 50,000 in our answer, didn't we? But it tells us no interest was owed at the end of 20x6. Okay, so there's a reminder here that we need to deal with the interest, and we saw, didn't we, that these are 10% loan notes. So that means that if no interest was owed at the end of the year, then the interest must have been paid. So if you remember that interest appears twice in our cash flow statement, and both occurrences are in the first part of the cash flow statement. We have an interest expense at the top. Remember that interest expense may include accruals, and therefore that's not necessarily a cash figure. And then we have interest paid at the bottom of the first section, and this is actually the cash that was paid. So we need to put the number in twice. Now in this case, because it tells us that no interest was owed at the end of the year, then that tells us that there is no accrual, and therefore we're going to put the same number in both places. But if there was some interest owed, if there's an interest liability at the end of the year, then we need to make an adjustment, and the amount of the expense would be different to the amount of cash. But in this case, they're both going to be the same number. But it doesn't tell us what the number is. Well, if we look at our balance sheet, so we can see, can't we, that we have 300 of loan notes at the beginning of the year, and we have 350 of loan notes at the end of the year, and they are 10% loan notes. So we just need to work out 10% of the liability, and that will be how much interest we must have paid. But notice, we issued the new ones on the very last day of the year. So remember, under the accruals concept, we'd only accrue interest over time, which means that we only have the 10% interest based on the opening balance of the 300. So we just multiply that by 10%, and that means there's an interest expense of 30. Yeah. The 50 loan notes issued on the last day of the year have no interest due yet because time hasn't passed for this new issue. So we need to show interest expense of 30. So that interest expense is going to appear at the beginning of our answer. We've got our interest expense, and because there was no liability at the end of the year, we must have paid all of that. So our interest paid, and it's paid, so it's a negative number, appears at the bottom of the first section. Okay, and then we're almost near the end of our notes now, so we're told that there were dividends of 40,000 was declared on the 15th of December. So again, we noticed that a date was provided, and that date was relevant for us. It told us a bit more about those loan notes, and again, a date's provided here. So this was declared before the end of the year, which means that we must have an expense, well, it's not really expenses, an adjustment to retained earnings in the current year. So we can see, can't we, in terms of our dividends payable, that there's the 40,000, so that's the same 40,000 that was declared, which means that we must have paid all of the liability from last year. Yeah, all of the 30 from last year must have been paid. So if we go to our workings, let's see how this looks. So we know that there was an expense of dividend of 40,000, so we would credit dividend payable with that new amount, and we would debit retained earnings, wouldn't we? So it's not really an expense, it's a deduction from retained earnings. So we can show that when we balance off our account, we've got a total of 70. But what we want to work out is what this number is, which is how much cash we must have paid. So we've got a total of 70, take away the 40 gives us a balancing number of 30. Yeah, so 30 is how much we must have paid in cash. Or if we want to do it in the other style of working, we start off with 30, we declare another 40 of dividends, but at the end of the year we only owe 40, so we must have paid 30. Yeah, that's the number we're looking for. This is 30 of dividend paid. So we've got the three numbers here for the finance activities, so we can actually work out a subtotal now, can't we? So 180 plus 50, take away 30, gives us a total of 200. Remember, we want to earn our easy marks as quickly as possible, so just adding up three numbers gives us an easy mark there. Okay, so let's go back to our notes. We're almost near the end now, so we've dealt with our dividends. Have we used that number twice? Well, we have used it once, haven't we? So we can just put one tick here. We've only used that number once. We've put it here in our working for our dividends paid. Okay, yeah, we have put it twice because we've done the working twice, but yeah, we've only used it once, haven't we? So that's telling us we need to use that number somewhere else in our answer. So where else can we be using it? Well, if you remember that we weren't given a profit or loss account, were we? So we know that during the year there was an increase in retained earnings of 90, but we need to take into account that there was also some dividend. So we've got a minus 40 for dividends. Remember, what we want is the profit before tax. That's our missing number. But we need to recognise that dividend has also been paid. Okay, so now we've put that 40 in a second place to answer and give it a second tick. And finally, the tax expense for the year was 35,000, all of which was paid on the 28th of December. So we've paid all of this tax, so that's the cash. We've paid 35 of tax. So we've used that number once, but we need to use it somewhere else, don't we? We need to use it in second place. And remember, we want our profit before tax. That's the first number in our answer. So we need to recognise that we've also paid tax as well before this affects retained earnings. So that tells us now we can work out our missing number. We started off with retained earnings of 300. We've earned some profit, but we've had to deduct 40 for dividends and deduct 35 for tax. And then that gives us a retained earnings of 390. So that tells us that we must have profit before tax of 165. So we can see that we've used that 35 twice in our answer now. So we used it here as the cash amount for tax, and we've used it here in our adjustment to work out what was profit before tax. So we can put 2 ticks on our number here. And remember, we're trying to do this just to keep control of our answer and make sure we've not forgotten anything. So we can see that all of these notes have 2 ticks against the numbers. All of the statement of financial position has 1 tick against each of the numbers. So that looks as if we've gone through everything, and notice we've gone through it methodically line by line to make sure we don't forget anything. So now all we need to do is just work out some of our totals. So in the first part of our answer, and remember in the real assessment this would be shown as a separate task just to do this first element. So we've got our operating profit before the working capital adjustments of 325, and then when we deal with our inventory, receivables and payables, that gives us a total of 235. We then deduct the tax paid and the interest paid, so we have a total cash inflow from operating activities of 170. So that would be the total at the bottom of the first part of our answer. We can now move on and look at our investing activities. Well, we don't have a figure for our property, plant and equipment yet, do we? So we know we started the year with 930. We increased that by 100 with a revaluation. We reduced that by 80 because there was a disposal. We reduced that by 100 because of depreciation. And at the end of the year, we've got 1,300. So that tells us that we must have had 450 of additions. Yeah, we spent 450 on additions. So we can put 450, but remember this is a cash outflow. We're spending money on those additions. Okay. And similarly, if we want to do it in terms of our T account, so we want to get our total of our credits. So we have 1,480 as our total. Again, we can work out our balancing figure, which is our additions. So that's how much cash we must have spent, 450. Okay, so then we can work out then our total for the investing activities. So we've got cash outflow of 450, cash inflow of 60 and 40. So there must be a total outflow of 350. Okay, now what we can do just to make sure that everything is okay is just make sure that the totals of our operating activities, investing activities and finance activities all come together to give us the overall net increase in cash and cash equivalents. So our 170, take away 350 and then add back 200 indeed gives us a positive 20. So that's okay, we seem to have done this correctly. But remember, in the real assessment, this would be separated into 2 separate tasks. So the 170 total would appear in one element of the question, and then the other parts in the second part of the question. So it may not be obvious to add up the 3 numbers to do your check. Okay, so there we are. We've gone through the whole of this walkthrough, and hopefully you can see the technique for building up your answer. And it's really important that you work through the question in a methodical way to make sure you don't miss out any of the numbers. Remember also that this question is probably harder than what you'd see in the real exam. Yeah, you're likely to see fewer adjustments, but we've tried to expose you here to a wider variety because we just don't know what might come up in the exam.